And with us right now, we've got Anthony Martinelli. Anthony, you're the co-founder of Jacobi Wealth Advisors. You're found on the web at jacobiwealth.com. Thanks so much for joining us.
Correct. Thanks, Josh. Great to be here.
So we want to talk about all things money as it pertains to business owners and business leaders. And so first off, thanks so much for joining us. You're in Pennsylvania. How long have you been in this space, and kind of what's your background?
Yeah, so background is this is my 28th year in the financial advisory business. So started right out of college.
Wow.
28 years goes pretty quick, but yeah, so this is pretty much the only job real job I've ever had, as I like to say.
Yeah. And so from a high level, explain what Jacobi Wealth does, especially as it pertains to business owners.
So yeah, so we're a comprehensive financial firm. We do have a focus of working with business owners because they tend to have a range of financial issues, and the financial planning process can be a little more complex for them because it's not just about personal financial planning. They tend to have these businesses, which at the end of the day, about roughly 70% plus of their net worth can be trapped in this entity that they spend many years building, and that presents some additional challenges in terms of how to deal with that asset from a financial planning perspective.
Yeah, no doubt. So, I think a lot of advice that you hear from financial planners out there, it's just, it's geared toward folks that are running a regular job, and, this idea of your business being an asset, just kind of normally missing from the equation. So therefore, you just see a lot of advice, and, meanwhile, it's like, they look at income. So if I'm earning a salary and or, revenue share, from my business, it's not really factored into normal calculators.
True. And then, obviously they want to get to the point where they reinvest back into their business and continue to grow this. What we try and help them focus on is what we refer to as exit succession planning. So, a real area you need for entrepreneurs and business owners is planning forward, looking forward, and having a long range planning process on the reality is they're going to exit their business one way or another. It's more or less focusing on how that happens and how to make that happen, and sort of choose your exit path and start that many years in advance, in many cases 10 plus years in advance, to really have a vision of who do you envision you transferring this business to. Whether it's family, whether it's you have a management team, whether it's I'm going to sell the company to a third party, or I'm going to bring private equity in, or I'm going to do an employee stock ownership plan, having a vision for that and then taking them through a planning process so they really understand what exit planning really is all about.
Yeah. So tell me, if someone's like, look, I'm not planning on exiting for another 10 years, what would somebody be doing 10 years in advance?
Yeah, and that's a great question. It's creating a business that they could transfer, right? Because when entrepreneurs start companies, they run 100 miles an hour. The business is really their identity. They perform almost every role imaginable, from, they're the chief marketing officer, head of business development. They're responsible for customer retention after the customers come in. They're the CFO. They play all these different roles. And creating a business that they can then transfer to someone else is really a whole different process, because in many cases, the business becomes way too dependent upon the owner. And if they're not able to sort of, delegate and build different roles and specialties and bring on quality people within the company, it impacts their ability to be able to transfer that business or sell that business to a third party, or transfer that business to family or management or other, potential buyers.
Yeah. So I'm on your website right now, jacobiwealth.com, and I see something that immediately caught my eye. It says, is your business too dependent on you? Take the Owner Dependence Index ODI survey for a report on that. So tell me about the kind of the Owner Dependence Index. Clearly, where we're at right now, I'm sure that I would not score excellently.
Don't feel bad. You wouldn't be in the Yeah, the owner dependence index is a proprietary tool that we utilize. It takes an owner through a series of questions to really help them evaluate, is my company too dependent upon me? And how will that impact my ability to transfer to someone else? You know, you could have a wildly profitable, or wildly profitable business. Doesn't mean someone else can come in and buy that business if they can't then replace you, right? So that's it's a big issue that owners face.
Yeah. So, I mean, any idea? I mean, are you just kind of there to say, yeah, business is too dependent on you. Go figure it out, how to make yourself less relevant to the day to day? Or I mean, how involved do you get in that coaching?
So we get very involved in the coaching. We take them through, basically a 5-step process. In addition to looking at, we call it a business exit readiness index is another tool we use, our Berry tool, the ODI tool. And then we're able to help an owner judge. There's 2 really key things. Are they financially ready to exit their business? And are they mentally ready to exit their business, right? Because they may have a lot of money on the sidelines and they're financially prepared to exit their company, but mentally, they're not ready to leave mentally. Right. So, I've been doing this where I've seen the 50-year-old have a monetary event, sell a company for $50 million. And in a year was so bored, depressed, and it was really their identity. And that's now gone. And, judging mental and financial readiness for them to leave their business is a really key factor that we consult with them on.
Yeah. So what does someone do then if they're like, listen, I have a buyout opportunity. But I don't know what I'm going to do. I mean, I'm going to enjoy the money and vacation for a while, but what should they do?
Well, I mean, they can, and we also kind of put them in a quadrant of what type of exiting owner are you? Are you an owner that is well off, but you're choosing to continue to work? Are you someone that wants to stay and grow? Or, you're not ready. You want to really stay and grow the company. You have a low mental readiness and a low financial readiness to leave the business. You want to stay and grow. Maybe I bring a private equity buyer in and helps me really grow the company and I take some chips off the table and I'm able to stay and grow the business. Or you're at a point where you say, you know what, get me out at the highest price. I'm ready. I just want to get out. I want to be done. I want to move on to the next phase of my life. So we help them really identify what type of owner they are, help them choose an exit path. That could be many years in the future. It doesn't have to be today. The misconception is, if I say you want to exit your business, it means I'm going to sell you right away. Think I'm selling my business. That's not always the case. You could be staying in the business and bringing in private equity. You could do an ESOP with your employees and continue to stay. You could transition to family members or a management team. So there's a multitude of different options available. The issue for business owners is, exit planning is a specialty, right? If you're working with an M&A person or a business broker, they're being paid on transactions at the end of the process. They're being paid on a deal being consummated. In reality, only less than 10% of owners actually sell their company to a third party. And a variety of reasons for that. But being able to take them through a process where they really understand what's involved in an exit and how to plan it many years in advance is part of what we do.
So are there then just kind of general best practices if we're like, I think the goal here, is X, right? Or, if an owner is kind of looking at their weekly schedule and they're like, yeah, listen, right now, if I take a week off, it's going to impact the business. If I, heaven forbid, we're laid up for 30 days, sales might abruptly stop, so I guess I'm just trying to think of like a 101 here on, what questions we should be asking ourselves or, what's a good practice that we could be implementing on a regular basis to become less and have the business be, not quite so dependent on us.
Yeah. I mean, it's a good question. I mean, our goal is to provide, a business owner a written strategic exit plan. So they kind of understand what the future looks like. The growth process is a little bit different. But there's 2 parts of this. There's really also protecting them from unexpected events. God forbid what happens if you don't walk in tomorrow, right? You use disability as an issue, but what happens if, God forbid, someone dies prematurely, now you have your spouse. Is your spouse going to step in if you're married and run this business? Does she know anything about running the business? So it's developing a written succession plan. You'd be really shocked that, it's probably close to, I bet 90% of most business owners don't have a written strategic succession plan. If for something were to happen to them, if there was an unexpected event. So that's also part of it as well. So we do give them best practices on how to prepare for unexpected events and how to plan a strategic exit path in the future. It's, Stephen Covey's book, Start with the End in Mind, right? One of the most famous business books ever. We help them sort of start with the end in mind when it comes to, exit and succession planning.
Yeah. What would be if someone's like, I don't really have a succession plan, like what would be the first, if all they had or all they thought about was blank, at least to kind of, get them down that road? I'm just trying to think of like, what the basic building blocks of a succession plan are.
Well, if you keep it very simple, because, we try to communicate some complex, issues that we want to keep them simple. I always start with, listen, if something were to happen to you, or you have your boardroom, or you have your conference room, or you have your desk, and you're bringing in, the person that's closest, you bring your team in, or however many key people will help support your organization. I bring them into the room and say, listen, I want you to go through an exercise where you're not here tomorrow. And you give me, the critical 10 items, the critical 5 to 10 items that you need everyone to know to make sure this business can continue on, at least in the near term, beyond your existence, right? So it's thinking through and saying, if you're not here tomorrow, we're putting you at the table. We're taking you out of the equation. Give us the key variables that where we need to communicate to banks, to suppliers, to vendors, to customers. What are all the key things that need to be executed upon to be able to make this business either run, at least in the short term, preferably long, where we're not now saying, okay, we have an asset that was worth X, now it's worth 10 cents on the dollar because there was no plan in place.
Yeah. Is there a way to, let's say someone's like, listen, I put it all in the business. Business is doing well. We're profitable. We have really great prospects for the future. Is there any kind of like apples to apples or whatever way of valuing that as opposed to, more of a traditional 401k IRA kind of path? I'm just trying to think of the business owner that's like, man, I don't really have a traditional retirement account set up, but we've got a valuable asset here. This is a successful company. It's profitable. We've got great prospects for the future. Like, is there any way to compare apples to apples there?
Yeah, I mean, there is. And you're going to find it's way more common for business owners that, especially early on, they're going to invest all their energy and all their capital back into building the business. And I'm upfront with business owners. I mean, we manage a significant amount of capital portfolio assets, but I say to business owners, listen, better what to do with your dollar, and probably going to earn a greater rate of return reinvesting your dollar in your business, the business that than I will, invest in capital, in traditional types of investments. Not that we don't do that, but they reinvest heavily. But the issue becomes, do they have a good business, or is their business a good business, or is it a good investment? Right. So you could have a very good business. It doesn't mean someone else is going to judge it as a good investment. It's a great investment for you, but is someone else going to want to buy it? Is it a good investment for them if you can't be replaced, right? So there is a way to judge that value, and there is sort of an inflection point where the business becomes so successful that they start to take that capital and they're putting it into other business ventures, other types of traditional investments. They may be buying real estate, starting other, spin-off synergistic businesses related to theirs. So you do get to that point where, other investments begin to be made, but it's very common for everything to be poured back in and that equity to be trapped. And then how do you how do you release that equity through a planning process?
Yeah. I'm just looking at your website here. 86% of private business owners lack a formal exit and succession strategy. So again, don't feel bad. You're in the majority, but there is hope. There's light at the end of the tunnel in terms of like you can get this done if someone. When is someone ready for you? Like, what stage should they be in a business, or, what do they have going on in business? Or, I'm just thinking of the requirements that they'd want to have in place before they come talk with you.
Yeah, I think we work with startups and we work with companies worth $250 million plus. So I think if you started a business and that business is now, you're going to grow that asset. Even early on, there's certain protection measures that you need to take to protect your wealth, protect your investment into the business. So we can work with startups and we can work with very large established privately held companies. I don't think there's a revenue minimum or a years in business minimum or those types of things.
You co-founded. So when was Jacobi Wealth Advisors created?
So we opened our Berwyn, Philadelphia office in, it'll be 7 years, 2014, June.
Congrats.
Yeah. Thank you.
And how where do your customers come from? Like, how have you been able to grow that over the past 7 years?
It's primarily, grown organically through referral. I'll call them brand ambassadors, our raving fans, or
oh, really?
That have been with us for many, many years, that introduce us to their friends and family and colleagues. I also have strategic alliances with, some accounting firms, some law firms that also, refer us, a good amount of new customers as well.
Well, it's a great position to be in to get a lot of your business word of mouth then.
Primarily, word of mouth. We are, embarking on some additional, some SEO and
sure,
some additional marketing campaigns to sort of, we've been our own best kept secret in some cases for many years, and we want to try to, change that a little bit.
If somebody, Anthony, were to go to your website, jacobiwealth.com, what would you recommend, particularly again for our business leaders here who are like, okay, yeah, I want to start taking this pretty seriously, probably not planning an exit for at least another, say, 5+ years. But, I'd like to start thinking with the end in mind.
Yeah, I mean, we have some great tools on the website. You mentioned, Josh, we have our owner dependence index tool, which is, provides you a great free report. You take a 10-minute questionnaire. We have our business exit readiness index. We have our white paper on 6 ways creating a business that you could transfer. Load our free white paper. We have a financial wellness quiz, even for individuals, executives, individuals, just on an individual financial planning basis. We have our financial wellness quiz. So there's some great tools and resources, I think, on our website where they could start.
Yeah. You talk about the Jacobi Method. How is that unique, or what makes that special?
Yeah, I think what makes it special is we take a financial planning is very fragmented in many cases. People reactively plan, based on circumstances and situations. We're able to take our planning process and make it a dynamic planning process, right? So we have a technology platform that we utilize where, this plan becomes sort of not a static, stale plan. It's a live, dynamic plan. They have access to be able to visibility to see their balance sheet, see all their assets on a daily basis, but we can make quick adjustments to financial plans, on the spot, and they have this sort of live, dynamic plan. And through our we call it our strategic tactical review with them, strategy and tactical review. We're constantly sort of taking high priority items and helping them make sure that they're not procrastinating and things are getting accomplished, because it's a very reactive, succession planning, very reactive. When a business owner comes in the morning, the last thing they're thinking of is a succession plan. They get the phone ringing off the hook, 50 emails, they're just not thinking about it. So playing the role of quarterback and corralling them to sort of say, hey, this is important, but more importantly, we're going to give you a process to succeed here. And that's what the Jacobi Method does.
Very nice. All right. Anthony Martinelli, your website is Jacobi with an I, wealth.com. And again, click on where it says business owners, and then you'll be able to access the business exit readiness index and then the ODI report, which I'm really interested in, the owner dependence index, and see where you score right now. And, I guess regardless of where they are, it's Anthony, you'd come in and kind of take them wherever they happen to be and like, all right, let's improve that score. Let's get you in a strong position so that eventually you'll be exit ready. So Anthony, again, congratulations on the 7 years. Again, JacobiWealth.com. You are the principal or the co-founder. Thank you so much, Anthony, for joining us.
Thanks, Josh. Great to be with you. Thank you.